This is a PowerPoint video about comparing US taxes to other countries. Again, you need to compare in order to evaluate. If the United States had the lowest taxes in the world compared to the roughly 199 other countries out there, you might say we should raise our taxes. If compared to the roughly 199 other countries in the world, we had the highest taxes, you might say our taxes should be lower. So let's take a look. We're going to compare US taxes here to the other rich nations of the world. And the other rich nations of the world have basically come together and formed a group of researchers, and it's known as the OECD. That's the Organization for Economic Cooperation and Development. It's basically the 30 rich nations of the world, and here they are. It's the United States and Canada. Mexico recently joined the group, and it's Europe. So that includes England, France, Spain, Germany, Italy, and others. Turkey just joined the group, Israel. It's also Japan, South Korea, Australia, and New Zealand, okay, and Chile. Those are basically the 30 rich nations, and here you see their headquarters right outside of downtown Paris, and there are economists and researchers here, and they get together and they compare their economies. Okay, so let's look at the tax burden on average US workers compared to all these other countries. This is the total tax wedge. Okay, so that's combining lots of different kinds of taxes that we have talked about. And here you see Germany, Italy, France, Spain. Okay, here's Japan, Mexico, South Korea, the 30 rich nations of the world. Here is the OECD average, and you see it's roughly about 33, 35%. In other words, on average, for a single worker, the government's going to take about 33% or a third of the person's money. How does the United States compare? Are our taxes among the highest and heaviest? Are we about above average? Average? A little less, a little lighter, a little lower than average? Or are we at the bottom of the pack? And how do you feel about that? I like this next slide because it combines the income taxes, in orange here, with the payroll taxes. So remember, you as an employee have to pay some taxes out of each paycheck for Medicare and Social Security, and your boss, the employer, also has to pay. So here you see Belgium. Taxes there are high. This is Western European socialism. They're going to take a lot of your money. In return, college, healthcare, plane tickets, train tickets, heating and gas, and electricity, those things are cheap. But the taxes are high. Where is the United States? Okay. Is the United States among the highest taxed countries, middle of the pack, or bottom of the pack? How does the US compare? And what do you think about that? That's 2013. This is a little bit more recently. This is 2018. And here you see the systems, the countries that take the biggest bite from your paychecks. So again, Belgium is going to take about 40% if you combine the income tax and the payroll taxes. Okay. And here's the United States. Okay. Roughly, where do we rank? And roughly, what chunk, what slice, what wedge of our paycheck do we lose in income taxes and payroll taxes for Social Security and Medicare? Roughly what chunk? Now, what about corporate taxes? Because remember, companies have to pay taxes too. Now, this shows you statutory corporate income tax rates. What does statutory mean? It means according to the statute. In other words, the law on the books. And according to the laws on the books, the corporate income tax rates in America are what compared to these other countries? Are we highly and heavily taxing our companies? Are we about middle of the pack? Here you see the OECD average, okay? Or are we lightly lower taxed? Now remember, These are the statutory tax rates. That is what you have to pay on paper. Okay? But US companies do not pay that high statutory tax rate. US companies end up paying what is called the effective tax rate. The effective rate is what companies actually end up paying. Why don't companies have to pay the statutory rate that's on the law books? Because companies can take a lot of tax deductions and exclusions and write offs, and they lower the company's taxes. This is all legal. For example, if you make something, if you produce something, if you have productive activities in the United States government allows you a deduction of 9%, or call it basically 10%. So that lets you write off or lower a lot of your taxes right there. Also, companies can get a tax credit for the taxes they pay in other countries. For example, if Coca Cola makes money by selling Coke sodas in Italy and it pays taxes to the Italian government, then Coca Cola can write off those expenses and thereby lower its taxes in the US. I'll give you another example. Let's say Nike sells shoes in Germany and it sells a lot of sneakers and it makes $1 million. And then they got to pay income taxes in Germany on the money that Nike made in Germany. Let's say it's $400,000 in taxes. Nike can then take that $400,000 and lower its US taxes by that amount. So again, US companies end up paying what is called the effective tax rate, that is lower than the statutory tax rate on the books. So let's look at it again here. Here's the US corporate taxes. Here are the statutory taxes. And you see here, our companies have to pay about 39%, call it 40%. If you look at the rest of the OECD, those companies pay lower taxes. But again, if you take into account all those deductions and loopholes and tax credits, you get the effective tax rate. And you see that the tax rate that the US companies end up paying is about the same as the rest of the OECD. It's a little bit less than all those other companies in those 30 rich countries. The OECD does not include some large economies like China and Brazil. So let's include China and Brazil. They're obviously big, important countries. And what do we get? Again, the statutory rates on the law books say that US tax companies pay really high taxes, 39, call it 40%, to basically 30% for the rest of the rich world. However, after the loopholes and the credits and the deductions and that kind of thing, if you look at the effective tax rate, you see that US companies pay about the same tax rates as in these other rich nations. Here is another study, because you can't just trust one piece of research, right? You got to look at a bunch of others. And here's some economists named Markle and Shackelford, and they compared the United States, Canada, France, Germany, India, Japan, and the United Kingdom, that is Britain. And what did they find? And it's very similar. If you look at the effective tax rates, US companies' tax rates are about the same as the other rich nations. It's a little bit lower. Are you okay with that? Yes or no? Why or why not? So here's another look. This takes us back to the 60s and the 70s and the 80s and the 90s. Here's the average tax burden on US Americans overall. And here you see it is in the rest of the OECD. So, how do US taxes compare to theirs? How does the US tax burden compare, say, to Europe? Are we taxed more than Europe? Are we taxed the same as Europe or less? And what has been the trend over time? This is a little bit more recent. This brings us up to 2015. And again, this is total tax revenue. So this is individual income taxes, corporate taxes on companies. Let's put it all together. And here's the OECD average of the 30 rich nations in the world. Where does the US rank? Are we among the highest, most heavily taxed? Are we about average? Or are we a little bit lighter and lesser taxed? I like this one because it combines a bunch of different taxes. This is income taxes on the left, your Social Security payroll taxes here in dark blue, your property taxes in yellow, and your taxes on goods and services. These are basically sales taxes. Okay, so you might want to pause this and take a second to take a look. How do our income taxes compare to the other countries? How do our payroll taxes compare to the other countries for Social Security? How do our property taxes compare? And then how do our sales taxes compare to the other countries? And here's your OECD average here. So you can compare average to America, average to America, average to America. Again, trying to bring you a little bit more up to date here. 2007, 2018 total tax burden, okay, compared to these other rich nations. And I think you're seeing a pattern here. What is that pattern? Consistently, even if you look at it in slightly different ways, the US tax burden compares how to other countries. Now, in order to come to an opinion about taxes, we also have to look at our debt. And basically, what's been happening is the federal government has been spending each year more than it takes in taxes. And so the federal government has been running each year what we call tax deficits. So, for example, in 1984, the government spent more than it brought in taxes. How is that possible? How do you spend more than you bring in? You also borrow, and the government's been borrowing a lot. There were a few years here when the government ran a surplus, but for the most part, the government has been spending each year more than it takes in. We call those annual deficits. If you add those up, you get the national debt. In other words, the national debt are the annual deficits added up over time. What is happening to our national debt? Is it going up, or is it going down, or is it staying the same? Here's another way to look at it. You can see the taxes coming in here, the state and local taxes, the payroll taxes, and the corporate taxes. Here's our federal income tax. Put all the gray tax money together, and you get total tax revenues. But the dotted line shows you how much we're spending. And you see here again that we are spending more than we're bringing in. And it's been that way for a while. Here's the exception again. Here in the 1990s, Democrat Bill Clinton was president. The Cold War ended against the Soviet Union, so we cut back on military spending. And as a Democrat, Bill Clinton raised taxes, and so we ran a surplus there for a few years. But for the most part, we've been spending more than we've brought in. So what has happened to our debt? If you look here, our debt has gone up. Under Republicans like Reagan and Bush and George W. Bush and under Democrats, the debt has gone up. The debt went up here at the tail end of Bush and the tail end of Obama because this was the 2007-2008 subprime mortgage crisis. The banks basically lent to Shady Sam and charged him a high interest rate. He did not pay back the banks, and so the government stepped in and gave the banks a lot of money so they could lend to our families to give us home loans and car loans and college loans. When the government stepped in and gave that money to the banks, the government borrowed a lot of money. Here's another way to look at it. Here you see the different presidents, and both Republicans and Democrats have been spending more than they have been bringing in. So here you see Ronald Reagan, Republican, back in the 1980s. All right. He cut taxes. He spent more on the military, so he added to the debt this much. George W. Bush, Republican, okay, he added to the debt. And this is Bill Clinton here. He added to the debt. George W. Bush added to the debt quite a bit. Basically, 9/11 happened and the terrorist attacks, and we spent a lot more on the military. Going into Iraq and Afghanistan, our military spending went up. At the same time, we cut taxes. So, what did that do to the debt? Barack Obama, again, there was that 2007, 2008 subprime mortgage crisis right when Bush was leaving and Obama was coming into office. The government lent money to Shady Sam. Shady Sam didn't pay back. So the government stepped in and gave about $11 trillion to the banks so they could give car loans and home loans and college loans to reliable Americans. And here you see both Bush and Obama added a lot to the debt. Here is Donald Trump. He cut taxes. At the same time, he spent more. And so he added to the debt. And more recently, Democrat Joe Biden has been doing the same. Trump and Biden have given money to the people to deal with COVID. And much of that money has been financed by borrowing more. So, given that our debt is going up, it's gone up under Republicans. It's gone up under Democrats. It's gone up under Republicans. It's gone up under Democrats. Do you think our taxes should be higher or lower? And how? And why? Let's look at the future here. Let's look at 2030, 2035, 2037. What is the future trend? Well, if you look here at the tax historical average, all right, taxes bring in about 20% of the nation's money. It's about 18%, but about 20% of the nation's money. And our government is spending more and more of the nation's money. What are they spending on? They're spending on Medicare for the old, Medicaid for low-income people, Social Security to help old people retire. This is interest paying off the debt, and this is other. And the big category there is the military spending. And there's other stuff, but the mail, the veterans, and the space program don't cost nearly as much as the military. So I'm trying to show you here, given how US taxes compare to other countries, would you raise them or lower them? Why or why not? And given our debt situation, okay, would you raise or lower taxes? Why or why not? I hope this has been clear. If you have any questions, please let me know. Thank you.